Welcome to another lecture of Homeschool MBA. Thank you for being here. Let's get started. So the topic today is economics and finance for managers during an MBA course. There's a one-pager that goes over primarily things that are taught in an economics and finance for managers class in an MBA. This class is very helpful in developing business case. It helps you understand the finance and economic side of things, and evaluate investment and finance opportunities. Welcome, Professor. How are you doing? And let's give the class an overview of economics and finance for managers.
I'm okay, and thank you very much. Well, before we get into this lecture, you must understand that in every company or corporate world, you see, there are economic managers, or finance managers, operation managers, marketing managers, general managers, production managers, and things like that. So, because the pyramid of the company is made by these managers. Now, economic and finance managers is one area which is perhaps the most specialized area within the company. Now, these people, those who are economic managers or finance managers, they need to have accounting or finance background so that they understand the normal terminologies of the of their operations. Like, for example, capital structure. Now, capital structure means that how much they want to invest, how much they want to keep in reserve, and how much do they want to have loans from the banks. And then there are assets, the fixed assets like plant with machinery and computers and all that. And there are movable assets like their accounts and things like that. Then financing and cash flow. Now, basically, financing means here either using your own money or taking loans from the bank. Now, so that is these managers, they have to see that, on what margins the, banks are providing loans and financing to the company. And based upon the interest rate that they are giving, and what are your profit margins in your this thing after paying the loan to the banks. Now, the cash flow is basically cash in hand, that how much cash comes in and how much cash goes. Could be on daily basis, weekly basis, or monthly basis, whatever it is, taken as appropriate for the managers. Then forms of business, it would mean that what kind of business you are in, whether you are selling services or you are selling products, or you are in manufacturing business, or you are in this, marketing of your services, things like that. Similarly, the responsibility of financial manager is to make balance sheet. Now, balance sheet speaks of the entire accounting of a company in 1 year or whatever it is. It shows the assets and the liabilities, and then it shows the depreciations. The depreciation, different companies have different rates. For example, computers. You have a computer, and the computer's life is only, say, 7 years. And the computers, there is a, let's say $7 is the price of the machine. So you have to reduce, let's say, you buy a computer today, next year it would be $6 only. Next year would be $5. Ultimately, this computer will come to zero value, and then it would need, replacement. And this depreciation goes into your account, which you have to take care that your products are, being depreciated, and you will have to, retake them. And then income statement, that means that how much money is coming to you. So which will, kind of give you the cash flow and will tell you your, kind of financial position. Taxes, naturally, there are different slabs of taxes. If you make, say, a certain amount of profit, and then you go up and up, and similarly, the taxes also go up. And sometimes there are companies which are paying something like 80% of their profit as taxes, and they are working only on 20%. So that also is part of the finance manager's duties.
Mhm.
And then is present and future and cash flows of the company. That's where they look at the inflation rates, and then they look at the interest rates, and things like that. So then their own, let us say, cash flows or their own money also needs to be, their profit need to be invested in, let's say, mutual funds or stocks, so that the whatever the profit that making after having given the salaries and other running and expenditure, rest they can invest. And while they are investing, they are looking at the risk that they are taking. Now, the risk is that money is always reducing its value because of the inflation. So, this is what basically the fundamental concept in finance and accounting, that how the manager should look, that how his investment is going to be, look like after 10 years, what kind of profits he will make after 10 years, and what would be the value of the money at that time. So sometime inflation is so high that the profit that you make, it goes into inflation. So it's some kind, the managers have to take smart decisions for this. And this is the responsibility of economic and finance managers, who are well experienced, and they have the, like, let's say, they are masters in accounting or master in finance, things like that.
Yeah.
So they are chartered accountants. So basically, this is done by the managers of that level.
Okay.
Yes.
Professor, one question comes to mind is, if you are a general manager, um,
Yes.
how should you work with, I guess, finance and economic managers? Obviously, they are experts in their fields, but how should one get engaged and at least
Yes.
give some inputs making business
Yes.
decisions?
Yes. You see, you become a general manager after a certain length of service.
Mhm.
You don't come, it's only experienced people who become managers, general managers. And when you are general manager, basically you have accounting division under you, you have finance division under you, you have marketing division under you, and then you have operations under you, and things like sales under you. So normally what the smart general managers do is they make committees, different committees, and these decisions are made in the committees, not general manager himself by himself only.
Mhm.
So he's assisted because all these departments are there to serve him. So it is a collective decision making by various departments, who are run by the experts but under the general manager. So he takes the input, relevant input from relevant departments, and then these proposals, alternates, are discussed in a meeting. Call it operation control committee, or call it executives committee, whatever you may call it. And over there, the proposals and alternates are debated, and pros and cons are looked to it, and then the general manager takes the decision. So general manager has the authority to take the decision, but not only on his shoulders, based upon the feedback or the feed forward from various departments working under him. That's how the general managers control their operations.
All right. Thank you, Professor. Great overview of this subject. Hope people liked it. Thank you for watching. Please like and subscribe to all our social media. Thank you, Professor. Till we meet again.
Thank you very much.
Bye.